Good morning guys, and welcome back to my channel. If this is your first time to my channel, welcome. My channel is about forex trading, traveling, and my YouTube journey as a whole. So if that's something you might be interested in, do hit that subscribe button and hit the bell button to help support my channel. And speaking of traveling, I'm going to be doing some traveling over the next few weeks and months. This weekend I'm off to Greece for a week. I'm going to be vlogging that. I'm off to Indonesia for a few weeks, and then Malaysia, Switzerland, and Dubai. So I'll be vlogging all those trips as well. However, in today's video is week 33, is trading week 33, and we're going to be looking at the safe haven currencies that I trade. So we're going to be looking at the yen, we're going to be looking at the Swiss franc, and we're going to be looking at gold as well. The question of the day is, do you buy the dip in the safe haven currencies? So do you buy the dip in gold? As of this morning, gold retraced below $2,000 an ounce. Do you buy the dip on that with an expectation to go long on gold? Do you buy the dip on the yen or the Swiss franc? Those are the questions we're going to be tackling in today's video. We're going to look at the USD Yen, the USD Swiss franc, Euro USD, and gold USD. Those four currency pairs that I'm currently watching like a hawk. So without further ado guys, let's jump into the charts. So straight onto our first pair, which is the Euro USD. Jump straight up to the weekly chart. Now let's have a look at this. Scroll the chart a bit to the right to have a full view, and we can see that we've broken above the cloud all the way up to the 118.79 is where we've tested, and we've pulled back a little bit. Now that's on the weekly chart. If we look down on RSI, we're kind of overbought on the RSI. On the MACD crossover, we're above the histogram. Now looking at these two indicators and where we are with the candlesticks on the chart, I'll be expecting a pullback to this level. So let's just drop in a horizontal line at the level, the support level that I will be expecting a pullback to. So if we say there to the 1.1397 pullback, I will expect this trend to continue in terms of the relationship around China and the US, the US election coming up, and also, you know, not forgetting where we are with the coronavirus, you know, the pandemic on the world. I will expect the pullback to this level, the 113 level, and then, you know, carry on with this trend to the level of 125, you know, so a weaker dollar all the way up to this level, to the level of 1.25. So which looks like, you know, if we stroll the chart to the right, we can then, you know, put in another horizontal line, looking to the left where that support level is going to be a resistance level. So yeah, I mean, if we just, you know, keep track of price action within these channels between the 1.13 to the 121. So based on this analysis, that's where I was expecting the price action to behave. So within this range, as I've said, pull back to this 1.13 level and then up to the 121. So we're looking at this on the weekly chart. Let's just leave our horizontal lines in there. Well, let's just jump down to the daily chart. Just have another quick look. All right, so we are on the daily chart. Stroll the chart to the right, and we can see, just looking at the MACD crossover down here, we can see that the signal crossing the main at this point, signaling a pullback to the downside. We can also see divergence here on the RSI. Now looking at the chart itself, although there's a flag formation here, we know that, you know, with the current situation within the market, you know, a risk off sentiment, we will be expecting technically for this pullback to occur and then the trend to the upside to carry on. So let's just have a quick glance at the 4 hours. We can see we've touched the bottom of the span B on the cloud, and price action is currently within the cloud at the moment. So we're quite confident that, you know, the retracement is going to break below this cloud, and this level is going to be tested, or a position around this level is going to be tested before we carry on to the upside. We can see on the MACD that the main is just about to cross a signal here, which will indicate to us a pull to the upside, but we know that, you know, it's just going to be testing this level, but predominantly be pulling back to a lower level, the 1.13. So let's just jump up to the weekly, because it's kind of pointless going down to lower time frames. So in summary for this pair then, you know, we can see we've got our horizontal lines in there. We know where we are at the moment based on the fundamentals and the technicals that we've just looked at. We'll be expecting a significant pullback to the 1.13 level, around this level, and then the trend to continue, seeing where we are again with the fundamentals. As I've said, the US election creating a lot of uncertainty in the market, a lot of risk off sentiment, and the US-China relationship as well. So we will be expecting this, a test around this level and the trend to continue to the upside on the Euro USD. We'll leave it on the weekly chart. Keep an eye on this pair, because it's a pair that we are interested in and we're looking at the moment, keeping tabs on. And we'll jump to our next pair, which is the US Swiss. So on the US Swiss now, we will stroll the chart to the right. First of all, jump up to the weekly, stroll the chart to the right to see where we are. So let's just have a quick look at the RSI. We can see we're oversold on the weekly at this point. On the MACD crossover, we can see we're at a low level here below the zero line. So we'll be expecting the mean to cross the signal to the upside. But as I said, always guys, looking at these pairs, you got to keep in mind the fundamentals as well as market psychology and your technical analysis as well. All three aspects hand in hand. So you can make a decision on the technicals, but if the fundamentals doesn't tie up with that decision, you'll be falling prey to market psychology. So on the weekly, we know where we are with the MACD as well as the RSI. Now let's just look at the candlestick. We see that we've pulled back below the cloud down to the 0.91 level on the weekly. We're kind of just stuck there at the moment. Let's jump back to the daily, because this is a pair that I'm currently looking at to short. So we stroll the chart to the right. We know that with the fundamentals in mind, as we discussed looking at the Euro USD, the formation of the flag here gives us a confirmation that it's going to be a pull back to the lows. So now the question here, we've got divergence on the RSI here on the daily. We've got a crossover of the mean and the signal here on the MACD, but we kind of just ignore that at the moment, because we see let's just put in a quick trend line here. We can see divergence here, we can see divergence here, and we know there's a formation of the flag here. So everything is pointing on the daily to a pullback to the lows. It's kind of pointless going down to a lower time frame, because we are kind of comfortable and satisfied with the direction of this this pair. So what I'm doing now is just keeping tabs on. Sorry, I've just gone down to the 4 hours. We're not going to 4 hours now at the moment. And what I'm doing now is just keeping tabs on this pullback. So I will be looking at 0.915, 0.914, and not just a little bit more on the pullback for me to then go in for a short position. Because if we just jump up to the monthly chart, and we can see that we're on the monthly chart looking at the MACD crossover, we just broke below the zero line and we're heading towards the downside with the divergence to the downside here. Stroll the chart a little bit to the right. We're kind of stuck in a cloud at the moment, but we're looking to the left and we can see, historically we came down to lows of 0.74 all the way down to 0.71. I will be expecting at least 0.86 to be tested. Let's just jump back to the daily and see, stroll the chart a bit to the right and just have another look at this. And as I've said in summary, for this pair I'll be looking to short it. So I'm just gonna wait for the US Open in a few hours to see, to then just confirm exactly at what point I'll need to go in to open my short position. I'll be expecting this pullback to be up to the 917. Then I'll go in to open my my short position. So that's my summary for the USD Swiss Franc. I'm just now gonna wait for the US Open just to see what the Open what effect the Open will have on this position here where we are at the moment. Maybe we're gonna be able to retrace back to the 197 ish, and then seeing how the flow is on the Open, the US Open, I'll be able to go in and I'll be going in to open a short position. Similar for the Euro USD, I'm gonna wait for the US Open for me to be able to I'm gonna be expecting on the US Open that we'll have a significant pullback, and then I'll be able to go into to that, go into this pair and open a buy position. So let's just jump. We were on the USD Swiss. Now we'll jump to the US Yen. So on the USD Yen, straight up to the weekly chart, let's stroll this to the right. We know the state of the Japanese economy at the moment. Despite the contraction, we still observe the yen as a safe haven currency, but maybe not as not as popular as it used to be before the coronavirus effect on the Japanese economy. It's still a safe haven currency that investors do consider in terms of risk off. So we're on the weekly chart now. Let's have a look at the MACD. We're kind of flat on there. We're kind of flat as well on the RSI. On the weekly, we're range bound at the moment between the 105 and I'll say the 113. In light of all the geopolitical tension and the US election around the corner, we can be expecting a significant pullback down to lows of 101. It's not a pair that I'll be looking at today to be opening the position. Maybe not today, maybe not tomorrow, but I'm definitely going to be keeping close eye on this pair over the next coming weeks. So let's leave this pair on the weekly and jump to gold USD. Now gold USD obviously has been a very popular pair amongst traders at the moment because of the level of uncertainty created by the coronavirus and the level of geopolitical tension going on in the world, and with the US election around the corner, the US-China relationship, China-Hong Kong relationship, Hong Kong US relationship, and so on and so forth. There's a lot of uncertainty, a lot of risk off sentiment in the market. So this is our favorite pair at the moment. Now if we just jump straight to the weekly, let's just stroll the chart to the right. On our MACD, we see where we are. We are at high levels of overbought. On the RSI, divergence, still heavily overbought. We've got a retracement below the $2,000. So let's just dive down to the daily. Let's have a closer look. Now we can see our pullback from the 206.5. We're now at 189. Well, we will not be surprised for a pullback down to 1745 because that's what we'll be expecting, a technical pullback to this level. So let's just drop in a horizontal line there. If we just jump quickly up to the weekly to see where that level sits, and let's just jump to the monthly, have another look. Yeah, so on the monthly, that level, that support level was respected in 2012 down to 2011. So let's just jump down to the weekly and stroll the chart a little bit to the right to have a look. We'll be expecting a pullback, maybe not to this level, but this will be a level that we wouldn't be surprised if this level is respected and we have a pullback over the next few days to this level. But do keep in mind the fundamentals as the level of uncertainty increases in the market and geopolitical tension increases. We will be expecting continuation of the trend to the upside. As we've discussed in previous analysis of this pair, it is highly influenced by the fundamentals in the market. So if we just stroll a little bit to the right and jump up again to the monthly, we went as high as 277. We've never been that high before. Looking to the left as far as the chart can go, and that's as far as my chart can go on the monthly. I mean, the highest we've ever been was, we've just about touched 1922, 1925 in 2011. That's the times of the financial crisis. We've never been this high before. And is this level going to be respected? I will definitely think so. But as I've said, it's going to be a pullback on the weekly as we've discussed. And then this level is going to be tested and probably violated depending on where we are with the fundamental. If the geopolitical tension continues and the level of uncertainty continues in the market, we'll be expecting this to go up to the 2.2s, the 2.3s, and the sky's the limit. But there will be significant pullbacks because if we just jump down to the weekly quickly and you look at the technical indicators, I mean, we're heavily overbought at the moment, so we will be expecting a pullback, a significant pullback very soon. My summary for this pair is I'm just gonna wait and see how this retracement, this pullback play over the next day or couple days or so, if we're gonna be if we're gonna go anywhere near this level, or maybe this level, anything around this. I want to be satisfied that this pullback is significant in terms of the pullback to the cloud, and then I will go into lower time frames to be able to set my entry point for a long position on this, keeping in mind the fundamentals and where we are. All right guys, I hope you enjoyed this video. Thanks for watching. Okay, there you have it guys. Do hit that subscribe button. I'm gonna catch you guys in the next video, which will be my trip to Greece coming up this weekend. So have a good day in the sunshine, and I'll catch you guys then.